And that now means we are live here. It is Wednesday, 2/3/2021, and it is Tackle Trading's Halftime Report, our daily show where we go through the market step at a time, looking at the charts, the news, the information, the economic data, pretty much anything significant enough that grabs our attention that we want to analyze and give you guys some insight on. Welcome out to our show. We've got a good panel of coaches here for you. I am your host, Tim Justice. I got Coach Matt on the back end doing analysis as always. We got Coach Tyler here for his regular Wednesday appearance, going to be helping us do the heavy lifting, looking through the markets. Let's do a couple quick introductions. Tyler, how are you doing today on a Wednesday?
Hey, you remember last Friday when we were all panicking? We were like, oh my gosh, the world's ending. Yeah, never mind. All is well. Don't worry about it. Uptrend's back on track. Happy to be here.
But hold on, we're not up 2%, Tyler. I mean, doesn't that mean there's a problem in the markets? You know, I thought we had to go up 2% every day this week. So I'm kind of wondering.
You're so cute, Tim. You're so cute. Move along.
Matt, how are you doing today?
You know, the last 2 weeks, Tyler's had to come on Wednesdays to make sure that everybody in the market remained calm. The end of the world isn't happening. We're recovering. It's been an interesting last couple of weeks in the market for certain. But Tim, doing great. Excited to be here with the crew to break down the market action here today on Hump Day.
Yeah, it is hump day. We're getting over the hump here in the market. Starting the week pretty good, actually, obviously, with some earnings reports and announcements. Last night, we had Amazon and we had Google report their numbers. We'll go through those in just a few minutes. Got crude kind of running here, looking pretty strong in the energy sector as well. I know Coach Tyler has a couple of trade ideas we're going to look at later in the show with that. And we've got a bunch of earnings today outside of even Amazon and Google. We'll look at that when we get into stock talk later in the show. But the very first thing I want to do is I'm welcoming everybody out. And you guys put in hashtag Team Tackle right in that chat. If you're brand new to our channel, subscribe, click the bell so you can come back and join us every day. But Matt, we have an announcement here at Tackle Trading, and Tyler, if you can go to the website here. Very exciting day for us. A project that we've been working on now for several months. And Matt, kind of talk to us about the huddle here.
Yeah, Tackle Trading, we're getting very close, guys, to releasing a new daily market commentary product called the Huddle. And like many of you guys, you're on the go. We got a lot of things happening in our life on a daily basis. And, you know, Tackle Trading, we certainly like to go into depth in many things. Our halftime report routinely goes an hour and a half because we got a lot to say, but sometimes not a lot of people have a lot of time to hear what everybody wants to say regarding the market. And so we're excited to announce here at Tackle Trading that we are releasing a product called the Huddle. And the Huddle is a daily market commentary product that will have the top 5 storylines of the day. Eventually, in 2 to 3 weeks from now, we will have a podcast to go along with the Huddle. It will be called the Huddle Podcast. And, you know, in that Huddle Podcast will be basically a quick 5 to 7 minute jaunt around 64,000 feet of everything that is happening in the financial markets that day. Because again, we know a lot of people are on the go, got a lot of responsibilities in their life, and we appreciate the time that they do, spend with us at Tackle Trading on a daily basis. And we want to make sure that those people that have a lot of responsibilities in their life get pulled a lot of different ways and, you know, don't have a lot of time to dedicate this to this area of their life on a daily basis. We want to make sure that they're getting the same type of quality information that everybody is getting when they come to our shows and our webinars and our halftime reports and through our scatter reports and everything else we do at Tackle Trading. So the Huddle podcast is currently live, and you can go to the Huddle there, Ty, if you don't mind. You can find it there, right there on the Tackle Trading main page. It's not a pro product. It is a Tackle Trading product. It's an introductory product. And if you'll scroll down here, you'll see the Huddle podcast. That's where the actual podcast will go if you want to, listen to it and whatnot when we do release it. But every day, if you'll just keep on scrolling down, you'll have the top 5 storylines that we see for the day so that you can be very familiar with kind of what's happening in the market on a daily basis. And I'm very excited about it. Very, very, very excited about it. And as everything we put out there at Tackle Trading, not only is the content of the highest quality, man, the journey and the look and feel and the process of and the experience is also going to be pretty good because Christian Zisson is one of the most creative, amazing genius individuals I've ever known, and he makes all of us look that much better. So I really appreciate the work he puts on the back end. But yeah, definitely on a daily basis, guys. We'll be releasing this right before the halftime report. So on a daily basis, definitely check out the huddle to make sure that you're getting your market commentary fix on a daily basis.
Yeah, and the podcast part of this whole project here, guys, that we're excited about, that's probably going to be a couple of weeks down the road on that part of it. Right now, we've got the write-ups on site. We're going to be doing that every day, Matt, correct?
Yeah, and we're going to get out an introductory podcast this week. So there will be a podcast this week on it, but it's just going to be one of those 2-minute introductory. What is the huddle? So that you can subscribe to the huddle podcast, so that when we do start going live here in a couple weeks with the huddle podcast, you'll have the ability to get that first episode. And obviously anybody that subscribes through any, podcasting app, iTunes, or whatever your podcasting fix is in America in 2021, you'll be able to subscribe to that and get ready so that when we do go live, you get it on your downloaded. People are pretty familiar with how podcasts work in 2021, don't you think?
Mm-hmm. Yeah, absolutely. And I think a lot of people are going to be very, very happy with this, very excited. Great way for you guys to get the top 5 stories of the day, kind of break it down for you, simplify it. That's what we do here at Tackle Trading. I mean, that's one of the goals we have.
And don't get me wrong, we love the Trading Justice podcast. That's our baby, right?
Mm-hmm.
I mean, Tim, say something about the Trading Justice podcast and the claws come out real fast, right?
Mm-hmm.
We love that, but we also know that we go long-winded on that. We go through detail in that. We have conversations in the podcast, and quite frankly, we can go an hour and a half to 2.5 hours in that podcast routinely. We know people are on the go and need to get their fix in a short-term order, and so this is Tackle Trading's daily podcast, and I'm very excited about it. I'm excited about the release here in a couple weeks. I'm excited about the huddle write-up here today, and quite frankly, I'm excited about what the huddle does in 6 months from now.
Very, very exciting, very cool. And we'll be talking about this over time. Make sure that when you're on the Tackle Trading webpage, you click that huddle, kind of go through the post today, kind of get a good feel for what it is we're doing there, guys, and come back to it on a daily basis and review it. Right before our halftime show is when we're going to release it each day. So very cool, very excited about it. In fact, right in the chat here, guys, let's have a big let's watch the huddle, or put in the huddle. I don't know. Just put in the words the huddle, and let's get some energy around this new concept. And I love it. I'm really excited to get the podcast out there as well.
Hey, let's huddle up. Let's get ready for the day, bro.
Yeah, I like it.
All right, let's call some plays and let's get them out there.
That's right. Exactly.
Like it.
Exactly right. All right, let's go back and let's get through the markets here. Let's start our show and get down to it. Let's start with just technically here, in the market here, Tyler. Obviously, the world's not coming to an end. I thought your intro was absolutely spot on. Now we had to sell off a little bit last week. Found support, found the 50. We've bounced now 2 days in a row here on a Wednesday. We're carrying through that a little bit here, a little tiny doji, but up just a hair on the S&P. What are you reading on the market?
You got to be depressed if you're a bear, man. You thought you had it last week. You had a failed bounce attempt. You had some downside follow through a little bit. Those poor bears, man. Those poor bears. All right, that's all the sympathy they get. Losers. Look, I like this. I'm not concerned at all today. Man, those were 2 huge up days. What do you want? I mean, percentage-wise, I got to run the numbers because I don't know off the top of my head. S&P were at 382.78. Friday's low was 368.27. 368.27. We're up 4% in 2 days. I mean, I think the market can chill if it wants to chill. It just reclaimed almost everything it lost last week. So look, if you want a little pause, that's fine. I think it's great that we sold off this morning. We came right back. I mean, we could have had a little bit of a deeper retracement, but we didn't. We're around the high of the day right now. Intraday price action is going to look okay because of that. There's your intraday early morning sell-off, right back up. So Doji Day is fine with me after market ripping 4%. I think it's fine. And I also think you can draw a line in the sand at last week's low. That's your new line in the sand. We stay above that. Trend is fine. So nothing to see here, folks. Bull market's back on.
hmm and part of the juice that's brought us up off support, Matt, this week has been anticipation of President Joe Biden's 1.9 stimulus rescue plan that he's kind of been moving forward. And you did talk about that yesterday with the budget reconciliation, how they're moving this process. And I thought that was really good because it's educating a lot of us who don't necessarily know about the ins and outs of the Senate and the Congress and all that kind of stuff as to how these bills can come to fruition. But it seems like things are moving forward, Matt, and that's kind of created a little bit of a backdrop here.
Listen, Biden ain't messing around on this, guys. When he said, "I'm moving it forward fast," and I'm not in the mode to have a prolonged negotiation. I didn't know that meant if we don't agree with parameters on this massive stimulus, that the following day we're going to take a vote, and they did. They took that vote yesterday, and what happened? We talked yesterday about the two different paths that Biden could take to get to that 1.9 trillion and get that stimulus bill passed through the legislative process. And he met with a group of 10 GOP senators there from a couple nights ago. From all accounts, that meeting went well. Biden did tell them that he is moving forward and that he does anticipate continuing to negotiate. But just to give a quick update on that process, we did get a vote yesterday. It did pass down party lines 50-49 to pass the it's not a legislative act, it's a budgetary reconciliation process, but the vote was to continue moving down that path. It's not a vote for legislation, it's a vote to basically set the standard for the rules that protects the minority party. In this case, that would be the GOP. And then they have the vote on the rules and the parameters to go through the budgetary reconciliation process. That's what transpired over the last 24 hours. And that's where we're currently at. It does signal that Biden is serious about his $1.9 trillion budget stimulus package, and they are targeting that March 14th deadline. And through the Budgetary Reconciliation Act process, they certainly can hit that deadline. And so, as of right now, the market is focused on, all right, now we know the current parameters of this. We know what's in the proposals. Let's see that process play out. And I do anticipate Biden, who has signaled that he wants to do it through a nonpartisan, a bipartisan way. He has signaled that. I still think that they will be negotiating there with the Republicans, but as of right now, they are continuing to move forward with that budget reconciliation process.
Yeah. And it's created a nice little backdrop here in the market, obviously. And it's not the only reason why the markets are up, but it definitely did not hurt it at all. I mean, we found the technical bounce, we started moving, but then that news really did propel Tuesday's rally, at least, Matt. And it looks like this thing might move quickly. I know that they've got some other stuff that they're going to be able to do on Friday, but I think they got a target of March 14th, is what I read, that they want to get the whole thing done by. I don't think that the president's messing around with this one. It doesn't feel like it. So they're moving forward with it. Could create a nice little backdrop to the market.
I mean, guys, it's 2 days, and 2 days ago we were talking about hypotheticals, and now we're talking about specific actions. And quite frankly, when was the last time we did that from a government perspective? Like, he's signaling he's not wasting time on this.
Yeah.
Whether you agree or disagree is a different conversation with it. But again, this is where we're at from an actual process perspective.
Tyler, can you flash through all four indexes just really quickly? Something I always like to do, just kind of take a look at relative strength and weakness if you're seeing anything.
Yeah. Take a look at the NASDAQ. Technically, Tim, we're almost at a new high on the NASDAQ. We have seen some strength over the last couple of days in tech. But it looks similar. I mean, we didn't sell off as much in the NASDAQ either. So this looks similar to me, just pausing today at a prior pivot high. I think that's fine. As we'll talk about here in a minute with the earnings on Amazon and Google, I think you continue to see good performance out of large cap tech. So a little bit of strength out of tech, I guess, is the takeaway there. Small caps, kind of the same story. Again, these didn't come anywhere close to their 50-day moving average, formed a nice higher pivot low. That's a good line in the sand to watch moving forward. We stay above that. The uptrend's intact. I think just a pause day after two big updates, Tim. Still looking strong across the board as far as large caps, small caps, and tech.
Mhm. Yeah, and obviously, I mean, as you're looking, there's such subtle differences here. I think the Nasdaq for me has got the most strength. The Russell's looking pretty good. The S&P's almost breaking out into a new high. Dow's
Yeah.
kind of the fourth one for me there as well. Yeah, I'm with you. And I actually thought we might be able to get a little bit more of a pop here today. Potentially, we're not seeing it though, but we did have some pretty good earnings numbers out of Amazon and Google last night, man. I know we normally do
Pretty good.
earnings. Yeah, listen,
Pretty good.
listen.
That's like Apple saying Apple was okay. Like Microsoft was just decent.
125 billion in revenue. That's okay, Amazon.
Yeah,
Nice job. Golf
Amazon
clap.
Bezos goes out on 125 billion, cash and 400 billion over the last year. Just to remind people, Amazon 6 years ago was reporting 20 billion quarters, $25 billion quarters, $18 billion quarters. Amazon just reported, guys, a 125.6 billion dollar quarter. I mean, just absolutely robust, absolutely amazing coming out of Amazon. Just absolutely destroyed both top and bottom line projections, and clearing over that 400 billion for 2020. I mean, that's the first time, very similar to Apple last week, that this is the first time Amazon has crossed that threshold. But now that they've crossed that threshold, new standards are going to be expected for the future. But congratulations to Bezos and Amazon for such an amazing and fine quarter. And quite frankly, I know many people are familiar with the Jeff Bezos news. This is nothing new. I mean, Bezos did, signal this last year, but it was further announced that Jeff Bezos will be stepping down from his role as active CEO, and he will be turning that role over to the CEO of Amazon AWS, their cloud-based business, which is their most profitable business, which really does help them on an operating income level on a quarterly basis. But it was a fascinating quarter from an overall revenue perspective, and the revenue should be celebrated, but I like the EPS number is so good that I think it's even better than the revenue number, quite frankly. Amazon was expected to come in at 705 on the quarter. It came in almost double that at 1409, guys. I mean, we're talking about a report with just absolutely utter destruction from an earnings and an EPS perspective. And when typically sometimes I'll do like an earnings roundup over there in the Facebook group, and I'll just give you the takeaway I said last night. And I said it is truly incredible to witness Amazon growth in revenue over the past 10 years. It's a company that's positioned to dominate the market space for years and years to come. While everyone focuses on the underbelly of the market, over the last week, here's Amazon, Microsoft, Apple just showing you where is the true strength of the American stock market, and that is squarely in the hands of the American consumer. I mean, just amazing report out of Amazon over the last night.
Mm-hmm. The raw revenue number was the thing. I mean, you asked me yesterday. We were on the phone, we are in Zoom actually, and we were talking as the Amazon numbers came out. Like, Tim, what's your takeaway? And just the raw number from the revenue perspective, just was a jaw dropper. Yeah. 125 billion, 400 billion for the year. I remember Tyler teaching classes, over the last 10, 12 years and talking about Amazon's revenue numbers when the earnings came out. And there were many years where it was 10 billion a quarter, 12 billion a quarter, 15 billion a quarter. Now we're posting 125 billion in the fourth quarter in 2020. Just really amazing. You've got to applaud that. And obviously at this point in his life, Jeff Bezos can do whatever he wants to do. And
he's entered that phase of his life.
Yeah.
I think he's good. Yeah. And again, the announcement that he is stepping down, I mean, it did shock a lot of people yesterday, but this was in the plan from a year ago. And again, the individual taking over, Jeff Sassy, I mean, he's got a lot of work cut out for him. I mean, Bezos is handing him the keys to the kingdom, and he has built a kingdom. So, I mean, he's in a good position, and Amazon's in a great position to fly in the future. But the individual Jeff Sassy, he's coming into an environment that, from a regulatory scenario and from just all eyes on you from a government perspective, he's got some choppy waters to navigate there. Although I'm not concerned, to be honest with you, on that, but he does have some choppy waters to navigate there. But man, he built a juggernaut. He's turning over a juggernaut. And I mean, does anybody want to bet against Amazon? Whether it has regardless of what Jeff's in control. Like anybody? Hell, put my son in charge of Amazon, and I'm willing to bet it cashes 112 billion next quarter.
Hey,
Right.
listen, I'm sure we could probably still do pretty well. But I'm with you. I mean, this guy is not exactly new to Amazon, right?
No,
So
he's
it's a
been with
pretty
Jeff since like
correct.
1997.
Yeah.
And he was the guy. And AWS is so vitally important for the growth of Amazon. And again, this is kind of like the Azure cloud-based argument for Microsoft to a certain extent.
Mhm.
But he was the individual that was tasked, and this is the SASE individual. He was the individual that was tasked with building AWS. And AWS was built into one of the biggest cloud-based systems in the world, which is one of the biggest profit money centers for Amazon. So he's turning the keys to the kingdom over to an individual that was one of his right hands.
Yeah. And many of these guys that reach this kind of Jeff Bezos status, I mean, this is a traditional story arc, by the way. I mean, Bill Gates did it, Jack Ma did it. It's not this is not necessarily a new thing. So good for Jeff. Good for
They
Jeff.
all do it.
Congratulations
They all
on
do
that.
it.
Yeah.
Guys, those CEOs don't work till 65 and then retire with the 401k.
No, different life plan for them. By the way, one of the coolest things out of the entire announcement was that building you guys showed me that they are talking about
did you
Helix.
oh man, we got to show that.
I think we got to show
guys
this
see
one.
that? Oh, I saw that, and me and Tyler didn't even talk yesterday about it, but we had the exact same thought when we saw this.
Yeah, they're calling it's got a 350-foot tall HQ2. It's in Virginia. Look at this thing. It's like something out of Star Trek. It's like something out of some futuristic movie. You guys actually thought it looked like something from Sim City back when you used to play the video game of the day.
They're going to launch.
Doesn't it look like Sim City?
They're going to launch
striking.
drones out of the top of this thing. They're just going to come out like a beehive.
That actually kind of scares me.
Sending their crap out. I think that'd be dope.
It's cool.
I sent him a memo right
if
now.
they do it, I feel it's a beautiful building. So
I mean, it's striking. There's no question.
Somebody's going to
that.
come in and be like, yeah, but look at all that wasted space. Let's just build a box. Like, how quickly does that individual get thrown out of the building? Like, literally.
Yeah.
Let's
Well,
build a box.
it's only 2.5 billion.
That's
I'm
it?
pretty sure they can
That's
afford it. I'm pretty
That's
sure
it? Only 2.5?
I wonder if they finance that deal because they probably could with like zero interest. They could get a bridge loan if they wanted to. $2.5 billion architectural thing. That interesting. Yeah, that was interesting to me as well. Obviously, the numbers were fantastic. Amazon just a blowout quarter. Congratulations, Jeff Bezos. What about Google, Matt? Google was the other big juggernaut name that had earnings last night.
Can I mention one thing on the chart?
Oh yeah, for sure.
Yeah, I do want to, because I do have questions on the chart because. Yeah, go ahead, Ty.
I got two things. The first thing that I think is interesting. This is emblematic of how prices anticipate future growth and price it in. Remember, Amazon exploded after the pandemic, went from 1626, more than doubled, right? More than doubled in a few months. And all we've seen since is the earnings just going up and up and up and up and up and up and up. So I think this is a great example of how the market is smart. It's forward looking. It was able to see that earnings were going to explode on Amazon, and it priced it in ahead of time. The second takeaway for me is look at how the earnings has grown into the price. So sometimes price gets ahead of earnings, and the price will hang out and the earnings play catch up. This is one of the ways that stocks get cheaper from a valuation perspective, even if the price doesn't drop. Amazon's PE ratio, I know, has been going down.
It's been dropping.
It's been dropping over the last 6 months because the P is sitting there doing nothing, and the E is going up and up and up and up and up. And you don't even have to dig into it very far. You just look, $5 earnings per share, $10 earnings per share, $12 earnings per share, $14 earnings per share, and the stock is where it was last June. And so I just think it's a really good example of how that dynamic works, that relationship between price and earnings.
Well, and you can really understand if you understand the 5-year PE ratios was 111, but over the last 6 months, as we went through this consolidation and earnings has been catching up to it, the PE ratio is 96. So the PE, that's a wonderful point. And Ty, if you'll come back down to the broad market a little bit, I kind of have the same feeling in the market, quite frankly,
Mhm.
that we had a robust market coming out of the election, just the pop and run, right? Pop and
Yep.
run. And then you had that very simple consolidation pattern where it was just a fading action, that nice consistent trend that was developed after the Pfizer vaccine Monday, right? And it just kind of just faded up, faded up, faded up. Overall, I mean, for the quarter, it was an amazing fourth quarter for the stock market, quite frankly. And when we're looking at earnings numbers so far, and we're about a little bit more than halfway through earnings so far, and quite frankly, I mean, these numbers are amazing, amazing numbers. I mean, down the list, outside of a couple, key misses, EA Sports kind of is one of them here today, but outside of a couple misses, I mean, just amazing, robust reports out of Apple, Microsoft, Amazon, Google, Goldman, all across the financial space. And, whereas some people might be looking at being like, why is the market just not skyrocketing on these numbers? Guys, the market skyrocketed the entire quarter.
Yeah.
The entire quarter. And just think about it like this. Don't think about it in the terms of why isn't the market going up? Think about it like this. If we don't have these robust numbers from an earnings perspective, and we're go through all the craziness that we've went through from a market perspective in the last 2 weeks, this market's not holding up.
Yeah.
This market gives in to the face of that volatility. But because of the raw numbers of earnings are so impressive, it allows those investors to say, you guys go have your little parade in GameStop, and you go have your little circus in AMC, and you go do anything you need to do, and you yell at each other and scream at each other and call each other names on Twitter, do all of that. But as long as Amazon is posting $125 billion, I'm going to call that a circus, and I'm not going to care that much about it. And again, I'm talking as Mr. Market there, not just my own personal perspective, but it does give you a little bit of, without these robust, amazing earnings numbers out of the biggest companies in the market and certain sectors in the market, where would we be without these numbers after a robust quarter? You would be down. You wouldn't have supported that.
It's a very important point, because I'm even just thinking about not just Mr. Market, but my own psychology over the last 2 weeks. I mean, when you're watching market volatility and you have the backdrop, okay, Goldman crushed it, Apple crushed it, Microsoft crushed it, JP Morgan crushed it. And you're watching these numbers and these data coming in day by day by day by day. You just approach it psychologically different, kind of knowing, okay, there's a circus going on. There's a sideshow going on. The volatility is real. There's no question about it. You're aware of it. You downgrade ranking a little bit just to be cautious about what you're seeing. Obviously, traders need to do that. But then, boom, you start getting the rally off of support, the rally off the moving averages. No, it's great, Matt. The rally off of moving averages and all that kind of stuff. And you're right there. So from a psychological standpoint, for me, it's important to know those backdrops, Matt. You don't have to get the price response the day the earnings came out.
Context matters. Yes. Context matters.
Yeah, I agree.
Right. But I'll tell you, these robust earnings numbers, I mean, earnings needed to come back in 2021. We gave it a reprieve in 2020, given the pandemic, but earnings has to come back in 2021 to justify what happened last year. And, and I'm talking from hey, we got 4 quarters here, right?
Yeah.
I mean, if we got 4 quarters here with these impressive results in the first quarter, like, we're going to get there, guys.
Yeah.
Like,
well, especially if I get you 1.9 trillion reasons why you'll get there, right?
There you go.
Well, and that's only by March 14th. We just passed 900 billion last month. We're going to pass 1.9 trillion dollars in March. We passed 2.3 trillion dollars last June. I mean, so in the summer we'll get another 1.5 trillion, and in the fall we'll get another 2 trillion. I mean, where's the end game on that one? I don't think there is an end game to that stimulus conversation. I think it's going to be ongoing.
I need like the count from Sesame Street to talk stimulus, just about all the numbers. Just numbers are fantastic, Tyler. 1.9, 2.3, 900 billion.
When you think about it, when you think about all the stimulus we did in the last 10 months, oh, guys, it's half of our GDP.
It's crazy.
Think about that.
It's crazy.
Half of our GDP.
When you add the Fed and the fiscal all together.
When you add the Fed. When you add the Fed.
That's right. All
right.
right.
Of our GDP. And people are wondering, Why is the stock market up? Because we put $10 trillion into it. That's why.
Correct.
And we financed it at zero.
At
Right?
zero.
And we financed it at 0% interest rates. That combo's killer.
And we just printed the money in the first place. I mean, this is all fantastic.
And we just appointed the biggest dove in the history of the world as the Treasury Secretary.
Are you sure we did? Are you sure we did? Because Mario's bringing some back to Italy there, bro.
Mario Draghi coming back as Prime Minister.
Hey, at least Janet thought about raising interest rates one time. Mario Draghi never thought about raising interest rates. And I thought, honestly, Tim, I thought the world and myself specifically, I'm going to have a little bat moment where it's all about me, right?
Mm-hmm.
I thought I was done with Janet and Mario. I thought I was done. I thought I had 6 years. It was a volatile 6 years. I think we're all happy that the relationship ended and we moved forward. And now I'm seeing pictures on Facebook. What's going on? Like, nope. I can't take Mario and Janet simultaneously coming back to the world in the same month. This is too much for the world to handle. Too much dove.
Pretty soon
Prince is crying in his grave. Too much dove.
Maybe they'll bring Ben Bernanke back as the Fed chairman next. Give him a second shot.
No, Ben Bernanke just needs to go take his rightful place as the head of Citadel and reign from his throne of evilness.
Fair enough. One throne from Citadel, one throne from BlackRock. Larry Fink, which throne would be stronger? I don't know. That would be a debate. Not for today, though. We want to talk Google.
Who raises interest rates first, America or Italy?
Ooh.
The answer is no one.
Ugh.
Ever.
Probably not. Google earnings, Matt. Now this one from one blowout from Amazon. Yeah. Now you got a blowout from Google, but also that you got the price response from Google too, which was obviously much more impressive.
Well, it was, and we're still waiting on Amazon to kind of break out. You got to like Amazon though today. I mean, the market responded up. It sold off a little bit. It held the breakout channel. You got to like that, but nothing like we saw on Google here. Pop and run here on Google. Nice little runaway gap we're looking at here on Google. Looking forward to Tyler's technical breakdown there. But Amazon, Google certainly didn't hit the revenue marks that an Amazon or an Apple did from last week. But I'm putting Google's report up there in terms of the quality of the report up there with all of them. I mean, pick your best report out of Amazon, Microsoft, Apple, and Google right now. It's like they're all amazing, truly amazing reports. And so when you're looking at Google here, they reported EPS numbers of 22.30 versus the expectation that we were seeing there at, I believe it was 15.91. Mm-hmm. They did surpass that magical 50 billion arbitrary number that we just give importance to, but they did beat that $50 billion number coming in at 56.9 billion. And so a great beat on EPS numbers, a great beat on revenue numbers. They segmented the operating income for the first time out of Google, similar to what they did with the YouTube subscriber growth. And one thing that is happening at the top end of the market from an earnings perspective, and Apple does this really, really well. Amazon does this okay. Microsoft does this really, really well. All of these companies that we call Apple, Microsoft, Amazon, they're all just massive, massive conglomerates with many, many companies in them. Correct, Tim? Like many companies are.
100%. I mean, if you really dig into it, there's so many layers to every one of them.
Oh, yeah. Well, they've acquired everything. So,
I mean, you just think about Amazon's AWS versus their retail.
AWS one example. Is a separate business.
Yeah.
And so what they do is, instead of spinning off all these separate entities, they basically start reporting the income for that specific area of their business. And so now that Wall Street doesn't look at their raw earnings numbers from just an EPS versus revenue numbers and specifically what the actual numbers are versus the expectation, but what they have started to do is they've started to segment all these different verticals at the company level and starting to report their specific earnings on that specific vertical. And now the market, very similar to how we approach Microsoft, we look at Microsoft as that old-fashioned company that we love to write covered calls on and capture dividend. And it's, if Microsoft just feels like it's safe. But then there's this entire growth model within Microsoft that we focus so much on their cloud-based businesses. And that specific cloud-based business, the growth area of Microsoft, is what the market focuses on for the most part, outside of everything else Microsoft does. They do it with Apple all the time. Apple, segments their iTunes, their subscription, their Mac sales, their iPhone sales. And so the market sees all these different verticals, and they have projection analysis on all these different verticals. And you started seeing that a little bit more with Google here, starting to release operating incomes. They started doing this last year with YouTube as well, and the subscribe and the advertising revenue for YouTube started becoming a very important metric for Google relative to their earnings performance. And so Google comes out today, and they've segmented their operating income, they're segmented their YouTube growth and their advertising, and all of this is now we're starting to see Google a little bit differently, very similar to how we see some of those other big names in the like Apple and Amazon and specifically Microsoft. And so you gotta like what Google is doing. It's working. Don't stop it. You got to love their raw numbers here today as well. So yeah, everything's in a celebration mode a little bit with Google.
Well, and we are here on YouTube, I will tell you. I mean, the YouTube stuff was very, very good. They beat their expectation there, but even just quarter over quarter, year over year growth on their YouTube ad revenue is pretty incredible. And one of the quotes I read from their chief business officer, Philip Schindler, who I did not know who this man was, but I thought the quote was really, really grabbed me. He said, "We now reach more 18 to 49-year-olds than all linear TV networks combined." And the amount of traffic they're getting on YouTube, it really is, if you think.
I don't know about you guys. My 11-year-old, she doesn't watch traditional stuff.
No, they go to YouTube.
They go to YouTube.
Mm-hmm. Or TikTok. My kids go to TikTok too. But
I want to ban TikTok.
Well, that didn't happen last year. I don't think we're going to drum that
come
one
on.
back. He could have done that.
Just finish that one.
Help the parents out on that one.
Finish that one. Help us all out. Throw us a bone on TikTok.
No, it's amazing though with this stuff, guys. Their ad revenue, their YouTube revenue, they came out, they busted it out of the quarter. Tyler, also they broke out of their range here and broke out of this high channel pattern, base pattern they were in. What are you seeing in the chart now? Are we just overstretched, overextended? What would you be waiting for?
Yeah, I've been thinking about that as you've been analyzing it. The tough thing for me is it's like, what's your time frame? What if this pulls a Netflix? Netflix explodes on earnings. Admittedly, Google is better. I think.
Yeah, I would say that too. Good. I don't think you can compare the two from an earnings perspective, not from a technical. Yeah,
agreed. The reference to Netflix is more Netflix explodes on earnings, and then you have to sit through this pullback, right? And so I think if I'm swing trading, looking to trade this for the next few trading sessions, because it just went from 1,800 to 2,100, it's up $300 in the last 3 trading sessions. I think that if I'm going to enter a new bull trade here, I have to be willing to sit through some consolidation or potentially a pullback. Because let's be honest, it is not a clean, low risk entry given how much it's already run. Mm-hmm. And so me personally, because there's a million fish in the sea, this is not typically a pattern I would trade on the day of the gap, particularly not at this point. I'd rather have to buy it higher after a better setup than chase here personally. I think if I'm swing trading this, if I had to do something, I would just do a partial size. I want the ability to add into weakness. So that way, if it pulls back, I can use that to my advantage. Mm-hmm. But yeah, Tim, this for me is a tough entry for anything but a long-term investment because I think you're going to sit through some chop.
Yeah, for me personally, it would be just to wait. I would just wait.
Yeah, I kind of second and third that as well because I mean you look at the raw earnings numbers and it's not gonna like the investor class is not gonna be scared away by those numbers. They're looking to add and they're looking just to park money and I mean they're not scared. They're in celebration mode on these raw earnings numbers. But from a trader's perspective, I do agree with both of you guys. it's never good to chase when you're just chasing pure momentum. And maybe that's old school technical traders in us, but again, we're gonna maintain systematic processes when it comes to trading. I do think you gotta wait for a better pattern. You gotta wait for some consolidation, maybe a high base. From an intraday perspective, you gotta like what Google's doing from an intraday perspective. I mean, at the cash open, after the positive response to earnings, you had some volatility, but that got shooken out pretty fast actually, and then it kind of just maintained price action throughout the day, just on that rising moving average. So it's a no sell day with a pretty clean trigger, but I still think my point is, you like the daily action today as constructive. You like the fact that the volatility at the cash open kind of settled down very quickly. But at the same time, I mean, you're like you said, Ty, you're up, what, 15, 16, 17% in the last 3 days?
It's a lot.
Yeah. For put it on a watch list, wait for the pattern. But yeah, it's a great, I would put it in the, with everything else, I would put it into the great category as an earnings report. My initial reaction was, it might have been because I just analyzed Amazon, like literally 5 seconds before I analyzed Google. So I was kind of like in Amazon, oh my goodness, they destroyed the world mode. And so Google's numbers were good, not great to me in the moment because I'd just done Amazon. But having a little bit of time to reflect, Google posted a very, very, very good earnings report here today. It's not going to scare anybody out. As traders, we be patient and wait for pattern to set up.
I do like it. Your reference to the intraday chart was well put. I can see this squeezing into the close, right? If I'm a day trader, I think this is probably a stock that's on the radar of a lot of people today for obvious reasons. But that's where you have to define what time frame are we talking about, because I think you could.
I'm talking swing. Yeah, I'm talking swing trade. Day trade, you gotta love that ascending triangle coming into a clean horizontal breakout as a day trader. I mean, that's picture perfect from a day trader's perspective. But from a swing trade, yeah, you gotta let things settle down a little bit from a swing trade.
And it will give you an entry. It always does. And that's the thing is you go back and you look at Google's history, you look at any big earnings winner lately, and sooner or later they're going to give you a setup. So you put it on your radar, you wait, and it'll come to you.
Well, and that's kind of my perspective with Amazon here today. Amazon's report was absolutely amazing, and you got to love it. And you're looking at Google and you're like, wow, why isn't Amazon up? Well, I'm kind of glad Amazon's not up and chasing 3,800 today, because it's playing defense and giving us really good trigger potentially coming into next week.
Yep.
I'm gonna tell you right now, if Amazon maintains that breakout channel it had on the short term, it hasn't broken long-term channels yet. But if it maintains that 2-day intraday channel, if you look at the 30-minute chart very quickly, if it maintains that 3350 breakout, I think you're looking at a buy coming into next week.
Above 34.30.
Whatever the base is, we still got 2 more trading days, but. I mean, yeah.
Interesting. It's much healthy.
That's what I'm looking at, because I don't think there's anything on Google this week. I think it's be patient and wait for the next setup outside of day trading. But on Amazon here, I like the defensive nature it's played the last 2 days after quite frankly a rock star earnings report. Like Jeff Bezos is going out as John Elway after winning the Super Bowl. That's how good that Amazon numbers were, guys. Like that's how you go out. You Spartacus it, and he did it. Like, celebrate.
Well, he's going to play the Tom Brady role then, because he's still got a couple of quarters till he's actually out. He didn't leave till September. So he gets to win a couple more Super Bowls, Matt. He might be able to do touchdown dance. And by the way, Super Bowl is this weekend.
The announcement. So it's announced.
It's the announcement. I got you. Let's go through the commodity market real quick here, guys. Tyler, crude oil, gold, the dollar, even currency markets. Let's go through the rest of the market skyline. I want to get into stock talk a little bit here in a minute. Start with crude light breakout here, Tyler. We got it yesterday. It's been healthy. What are you seeing here in crude?
Maybe crude is making up for all of the mud that got thrown its way after the pandemic, when it was just a slog, right? It's like, screw you guys. I'll show you what a good uptrend looks like. And it's been glorious for the last 3 months. Just so well behaved, so respectful of technical support and resistance zones. And it makes you look smart when it does that, because it's like, oh, they said buy it on the breakout. It broke out. It's following through. Why are they so smart? Well, because crude oil is making you look smart because it's just behaving well. Look, this is impressive. It's trend continuation. You had a nice breakout yesterday, continuing today. It's breathing new life into energy stocks. I think it's just continuing to keep alive the narrative of economic recovery, energy stocks rebounding, better things ahead. It's just giving you no reason to bet against that or to doubt that.
And obviously, it's been healthy here for 3 days, start the week, and it's kind of creating a little bit of opportunity in the energy sector. There's a couple of companies that you were interested in. We're going to look at later in the show. I believe that's kind of tied to some of the crude strength, right? That's making you a little bit more confident in playing the energy side of it. So we'll look at those a little bit later. What about gold and silver? Obviously, silver's had all the euphoria this week, the craziness, the volatility. Gold's just kind of been stuck in the mud. Give me a read on these two metals if you can.
I just had a picture in my mind. Gold is like the old grandpa, like on the Lazy Boy, and silver is like this little Russell Terrier just running around him. He's just like, settle down, settle down. He's just falling asleep. There's nothing to see here. It's which is fine. It's stable, just hanging out. I think I would echo what we've said for the last couple of weeks. You try to trade gold directional right now, it's just not having it. So
do you like that Grandpa Gold? Grandpa Gold?
No, of course not. I hate that.
I thought you might hate that.
You'll wake up one of these days, but right now, like he's snoozing.
Listen, I'll take it with some honor.
Listen, I watched. We talked about HBO a second ago. I just finished watching the John Adams.
The old John Adams TV special, yeah.
Yeah, with Paul Giamatti or whatever. Yeah, and I just watched the last one where he died and he's the old grandpa. So that was fresh on my mind, I guess. Watching him putter around. That's what I picture with gold.
I did like you walking that dog backwards.
Hey, I was explaining the backstory. As for silver, hey, apparently
you got to talk me out of something here, Ty, on silver.
Well, look, I like the chart actually. Apparently, it's harder to squeeze silver than GME. Who'd have thunk?
No,
right?
It's impossible. It's impossible.
So, they need to pick a better mark than this one if they're going to try to squeeze it sustainably. But
don't pick one the entire world will fight you on.
Mm-mm.
Yeah. No, I think that, they picked the biggest bully on the playground. It's like, okay, like good luck getting a sustainable squeeze in that. I like it. I mean, it's almost like we, I was going to go with another reference, but I'll just cut to the chase. The last couple of days were just an interruption, right?
Yeah.
Just a sideshow. And now it's like back to what it was doing before. So it's like, just ignore what just happened and go back to, it had a nice breakout 4 days ago. It got a little out of hand with the whole Reddit crowd. Now it's back to where it was on the breakout. And does that mean that it destroyed its potential to go higher? I don't know. It's a little messy, but the chart is bullish. It's above the moving averages. You do have a pullback. I think that if they push this lower, it's going to get bought up anyways. So I'm bullish on silver. I got bullish trades. I like the dip. Messy, yes, but certainly more constructive than gold right now.
You thinking directional? Are you thinking, okay.
Yeah, you got to like that. If you put everything into context, you kind of like the pattern.
Mm-hmm.
If this happened over a 2-week time frame, we'd all be salivating at the opportunity, right? As silver establishes a higher high, dings 30, bullish retracement down to 27, catching a rising 9 EMA. If you get Mark's girlfriend on the chart there, you'll see that the 9 EMA is now playing a role as support here a little bit. And so you gotta like it a little bit when you look into the context of just the if you take out a little bit of the circus from the last few days and you just focus on the pattern a little bit, you kind of like where you're sitting at on silver right now. It broke out recently, established new highs, and now you're fighting for a support level at a new low. And if you're approaching this just as a bullish retracement and now breaking it down from an intraday, I think you're starting to see some things that are fairly constructive from a buying perspective. If you'll look at the intraday chart here, you're starting to see increases of support from an intraday perspective. But what I'm really looking at is that horizontal level of support that is right there at that 27.26 level. You have two different ticks right there at the 27.26 level that has now acted as a double top from an intraday perspective. And so now when you're looking at that tremendous downward movement we saw over the last 24 hours, it has found that support level at 26.5. There's a ton of support into that ballpark on the daily chart. And now you're looking at this from an intraday perspective and you're saying, okay, I like the slowing momentum that we're seeing over the course of the last, what would that be? Just, and since last night, I would say. So the slowing momentum from, right on the European Open, actually, which actually makes me even like it even more. So right there on the European Open, you started seeing momentum slow down on silver. It started going neutral throughout the entire overnight trading session, throughout the cash open here, today. And we're looking at a futures contract here. That's how we evaluate silver. But from the cash open, it's really just kind of stagnated, not a lot of movement up or down. And so you got to like that downward movement in price. Yes, would I like that over a 3-day, 4 or 5-day time period? Yeah, I would have liked it a lot more, but that's not the journey silver took in the last 3 days. There was some context to that. You got to like the momentum slowing down. That double top trigger at 27.26 seems like a pretty decent aggressive trigger above if you're willing to take the risk on with the volatility, because we're still in this storyline, right? We're seeing it settle down, right? We're seeing it settle down, but we're still in that meme trade storyline. And so you're going to have some volatility there, and we haven't had confirmation. I'm talking something aggressive here. What do you guys think?
I see it. I think you can map out a reward to risk trade from it directionally. I kind of also am thinking about naked puts on it just to kind of take advantage of all this crazy volatility and whatnot. I'm interested. I keep watching it day by day, and that intraday breakdown is definitely there. I don't know, Matt. I'm still kind of hesitating for some reason, just the craziness around the whole thing.
I mean, the circus. It's the circus. The circus is in town, and it's a sideshow, and it's taken all of our attention. But again, if you're just looking at it purely from a technical perspective, and give me a 30-minute chart on SI again there, Ty. If you just focus on the technicals, and yeah, we know the context that downward movement in price was over 1 day. But again, if that's a 3-day movement, you're seeing just a consistent downward movement in price followed by slowing momentum. Marty hit the trap, and let's see if Marty wants to bounce.
It's got a clear trigger. There's that, Tyler.
Well, and it's got a clear stop loss too underneath 26.40.
And ultimately, that's what it comes down to, right? If you can map out low risk, high reward, whether it works or doesn't, you do that again and again and again, and you're golden, right? So yeah, you mapped it out well, and it's legit. I prefer.
It's not a high probability trade. I'm not saying with the naked put, yeah, you got 90%. But even on a 50-50 probability here, it's a good trade.
With reward to risk. That's right. Yeah. People need to understand the difference between those two different things. Because reward to risk alone is not the only analysis you need. You also need to have factors of probability as well. And even on 50-50, like you say, the reward to risk would work.
I'm not even sure an aggressive trigger here would have a 50-50 probability. It might be in the less than 50% probability.
40, even at 40 though.
With an aggressive trigger. But
even at 40 though, you could make money on that equity curve.
Yeah. Yeah. Sometimes when you got the numbers and you got a clean trade, sometimes you just take it.
Interesting with silver. Obviously, the short squeeze mania has been around those different companies in this space, as well as silver mining stocks. I try to do it on SLV, which is the ETF product. Give me SLV. Just I want to confirm that the charts look similar. They pretty much will be identical, I'm guessing. Do we have a similar kind of trigger on the intraday?
The trigger would be above yesterday's high.
A little different. Okay.
Well, yeah, it's just you got to go above you got to get above that gap.
I see. Gotcha.
Yeah.
Gotcha. All right. What about the dollar here, Tyler, and crypto as we're moving through the rest of these markets? Little reversal pattern has been developing for a while now. Matt was talking about it throughout the week. What do you see here in UUP?
Yeah, I agree. The whole bottoming. This has been a masterclass in how trends bottom, right? Like if you want to better understand what to look for to be able to spot a bottoming pattern and a reversal in a downtrend, UUP's giving it to you, right? You had lower lows, bears were in control, then you started to have some higher lows, bulls were in control, you had a pretty clear resistance level, you had the 50-day, you popped above both. Yeah, it's put in a little intermediate term bottom there. Time will tell if it's a longer term bottom, but for now, I think that if you were bearish on the dollar, you got to ease off on that. And would you be bullish? I don't know. It depends on what your time frame is, but the short-term trend has turned higher, right? You now have a rising 20-day moving average. You're above the 50. So I would not be bearish on the daily chart of the dollar.
Okay, what about Bitcoin? In fact, what you just described exactly what Matt's been detailing day by day in that dollar. So it's always great to get two different technical reads on it. What are you seeing in Bitcoin?
Hey, I'm impressed this thing held 30,000, right? It could have been worse. So I'm impressed. And I don't know it's so choppy right now. It's like, oh, hey, you remember the days when this was just a clean uptrend? What am I going to do now? Well, it's harder to trade right now because it's a mess. So you now have a range between 30K and 40K. And if you like to trade ranges, great. But I don't know what your trade is right this second. It's not a low risk entry. So, and even if it ran from 30K to 40K, wouldn't you want it to chill out for a little bit before breaking out if it's going to?
Mm-hmm.
I would. It's bullish. It's healthy. It's back above all its moving averages. I'm impressed. I don't think there's a trade here, but I'm impressed. I think too, if you want to go with the theory that Bitcoin is a proxy for risk appetite, it's emblematic of how people feel about risk. Does it encourage you that Bitcoin's going higher again? Yeah, probably. I think, and I'm just making this up, but if you think that Bitcoin is a proxy for risk appetite, I'd much rather see this thing going up than imploding. I think that probably bodes better for the rest of the market. So I'm happy with it. I don't think there's a trade here, but impressed by the recovery.
Yeah, and that intraday analysis, Matt, that you had over the last few days has played itself out very, very nicely. For me, as a longer term approach, investor to the crypto markets, I like the price action last 6 weeks. I like the fact that it took one right on the chin, held support, did not violate 30K at least yet, is playing some time to allow that 50 period moving average to catch up.
Yeah.
For me personally, let it chop for months if you want to. I don't know if Bitcoin's going to give you that one way or the other, and it's probably going to break and run one way or the other. But it wouldn't bother me at all if I see some chop for quite some time. Because let the chart just kind of hang out, develop, and stay up here for a while.
And I agree with everything you guys are saying, but I'm just going to say this again. Outside of Elon doing what he did a few days ago, this intraday chart on Bitcoin has been very consistent. And that breakout of 35,000 we talked about, Tim, yesterday was a great day trading trigger.
Little day trade trigger. It did put itself out.
And once you start to see the day trading triggers come back, swing trading triggers aren't that far behind.
Well, and I'm glad you brought that up. That's a good exercise to understand in terms of like best practices. If you are on a time frame such as the daily and you're like, look, it's kind of choppy, I don't know what I do here. It's a good trick to go to a different time frame, zoom in, and all of a sudden what was maybe a little muddy on the daily becomes more clear on the intraday. And to your credit, you were able to find some intraday entries. That's a good way of going about finding opportunities.
And if you draw the trend line from that double bottom at 29,000 in the short term, connecting the pivots without Elon, and just connect without Elon. That's Elon. Yep. Without that, look at that 45-degree angle going up on a trend line. That is a solid, consistent trend line that traders are hitting. And again, remove that little volatility because that's Elon. That's all Elon right there. Remove that little volatility, and that trend is just very consistent, moving up with a very solid trend line, 45-degree angle going up. And so I do think the Bitcoin chart is day after day, as we're getting a little bit removed from that volatility, is getting more constructive. And when those daily when those intraday timeframes get more constructive, it does give you a little bit more confidence that this is setting back up.
Yeah.
Mhm. Gotcha. All right, let's move into stock talk next. And we got some companies that we're going to go through their news. And obviously, we got more earnings roundup. If you're out there watching the show right now, loving the conversation in the chat. Great job on the Skyline, Matt and Tyler, to get people up to speed. I saw Swin even talking about how helpful it is to get those earnings breakdowns. And I know that a lot of people out there does save them a lot of time, you going out and doing that research. So we do appreciate it. If you're new to our channel, new to our show, by the way, we do this every day whenever the markets are live. Click that subscribe button, click the bell, come back and join us when we do go live. And we have an event tonight, which is our Wednesday event called Trade Masters, 7 p.m. Eastern, where we'll have two coaches battle it out, submitting trade picks, and Coach Mark will be the judge. We've been doing that every week. We'll also announce that a little bit later in the show, just to kind of remind people to show up 7 o'clock Eastern time.
Yeah, and tackle trading. Do you guys enjoy Trade Masters? You enjoy what we do every Wednesday night? What time do we go live?
7.
7
Eastern,
every
yep.
single Wednesday.
Mm-hmm.
You know, Tyler, you got beat last week. We won't talk about that this week. I just want to remind you. But who's fighting tonight?
I know Coach Greg is defending
Greg's
the
defending
crown.
the belt.
I don't know. Mark has not confirmed to me who's coming up as the challenger. I haven't heard from him.
Okay, I'll tell you. Mark just reached out to me and asked me to do it.
Are you coming back?
You have a rematch already?
Apparently, none of you bozos are willing to go against Greg. So I'll go back in the ring. It's okay. I'll take care of it. He'll be gone. Don't worry about it.
All right. Let's see if you can knock him down after you got knocked out last week. So that'll be a fun one as a little bit of a rematch. No doubt about it. Let's start with
this is the third match between the two of those, I believe.
Is this your third?
Yeah,
Tyler has one. Tyler has one. Greg has one. Oh, Tyler, you got to bring it. You can't be down 1-2 to Greg. You're supposed to be the champ. You're supposed to have the belt. What's going on?
Dude, everybody has a bad day, okay? Everybody has a bad day.
Everybody has a bad day.
All right, Connor.
I like it. Let's start with GameStop if we can. And I don't want to go long on this. I don't want to go off on too much of a rant or soapbox. I know it will be tempting. There's no question about it. But here's the reality. I saw a headline today that made me want to get up on said soapbox for at least 1 minute here, Matt. Janet Yellen is calling a meeting with the SEC, the Federal Reserve, and the Federal Reserve Bank of New York with the Commodities Futures Trading Commission to address the market frenzy in GameStop. Now, Matt, who is the party that Robinhood is in question with that
I think
might be under scrutiny?
Old Janet has some conflicts here. Janet Yellen, Treasury Secretary Janet Yellen, and former Fed Chairperson Janet Yellen has called for a meeting with multiple different parties here, but the federal bank, the central bank, obviously, the Federal Reserve Bank of New York, the SEC, and then also I believe the Commodities Trading Commission. And so we're bringing a meeting of the minds of the players that make the decisions, these shadowy figures. And Janet Yellen is going to be the individual that is going to be overseeing the investigation into the market manipulation that started last week with the storyline on the market manipulation that started last week with everything that transpired with Robinhood and Citadel and Melvin Capital. And, we don't need to rehash that storyline here today. But I just want to remind Janet that she was paid $700,000 from Citadel for speeches over the last couple of years. And I believe there is a conflict of interest there. Janet Yellen should not be part of the investigation into Citadel when she is a paid spokesperson for Citadel. And one of her good friends, Ben Bernanke, was on the board of Citadel for years and years, banking millions and millions and millions of dollars. It's just wrong. It's just wrong. The people that are part of the problem are making the decisions over regulatory measures, and that is not going to simmer this situation down. And what they come out of this commission that they're putting together, what's going to come out of it? Maybe some regulations, but I highly, highly doubt at this point we're going to see anything besides a slap on the hands from what happened last week.
Mm-hmm. I don't think you're going to get much out of it. It is obvious. I mean, she did request an ethics waiver. She must be aware of the conflict of interest, at least.
There is a massive conflict of interest, and it's not hard to spot. You do not get paid $700,000 because they want to hear what you have to say. We know what you say all the time. Nobody pays you that money. They pay you that money for one specific reason, and that is access. And that is what they are getting through those paid speeches, is access from the decision makers who are now deciding over the regulatory measures and the punishment phase of any investigation. I'm sorry, that is a massive conflict of interest, and it needs to be called out. And I just don't think anything's going to come of this, and they're going to try to just push this aside.
Mm-hmm. Yeah, I agree. Tyler, anything you want to add to the GameStop craziness and saga? I know we haven't had you on the show here for a couple of days. It's kind of been the last 6 bars that's been going nuts. I mean, you've been trading 15, 16 years. You know, what are your thoughts?
My thoughts are easier stuff to trade than this. I think, yeah. I don't know. I can talk about it forever. I love things like this to the extent that it gets people involved in the financial markets, right? You get a whole new class of people that maybe didn't think about stocks, now thinking about stocks. To that extent, it's good. My hope is that those who just got their head handed to them don't now swear off stocks for the rest of their lives, because this is not buying GameStop is not investing, folks. It's pure speculation and gambling. So there are no conclusions to draw from this with respect to whether or not you can make money investing. It has nothing to do with that.
Yeah, like Tyler, I said that last week. I was asked the question, what lessons have you learned from the GameStop situation? I said, there is not a lesson to be learned here.
Yeah, it teaches you nothing about how to invest.
It teaches you absolutely nothing. It reminds you of things not to do.
Mm-hmm.
Yeah.
But those are not new lessons. Those are lessons learned many, many times over the years as it being in the market as a market participant. So, no, I'm with you, Ty. I'm not sure there are lessons to be learned here. I think there's just a gentle reminder of the type of game you're playing when you get involved in these types of storylines that have, that get into the mainstream.
Yeah. Well, and once again, by the time it hits the mainstream press, it's over. Well, and I say that not knowing, maybe it could go back up to 1,000. I don't know. But assuming that was it.
The short squeeze, that is over. Like that storyline's coming to a conclusion.
And so anybody who would, after this thing went to 350, 400, they just lost 50, 60, 70% of their money overnight, if not 100% if they were buying calls. So it's like once again, and of course we have the benefit of hindsight, but if you were early in on it, great, but you got lucky. I mean, duplicate this again and again and again. Good luck. It's a once in a lifetime type thing.
We said it last week. This is a major storyline that's going to have short-term legs, but like this market will move on to a different storyline the same way it always does. And you're seeing that right now, the market moving on to different storylines.
Yep.
One other thing real quick. We talked about volatility in last night's coaches show. And I think it was Majid, one of our members at Team Tackle. He brought up that he was, and I don't know if this was a practice trade or whatever, let's assume it was. He bought puts last week. And even though GameStop was down 60% yesterday, the put didn't go up in value. They priced these options so expensive. They made it almost impossible to make money if you didn't buy them before the explosion. And so it's like, even though you could have said, hey, everybody knows this thing's going lower, right? This is a short-term deal. It's going to go back down at some point. Try making money off of that.
Mm-hmm.
Yeah.
You couldn't short the stock. And if you did, they charge you out the nose to borrow the shares. And they priced the puts extremely high to where it's like, look, if we're at a point where everybody knows something's going to happen, good luck making money off of it. The market is smarter than that.
That's how they shut down volatility. They make it so expensive to play in that game that you just can't.
Yep.
And that's not, that story isn't new to GameStop. That's a tale as old as time.
Yes.
Yep.
Yep.
Cautionary tale, obviously one that may not be completely done just from the overall story arc perspective.
No,
it's coming out as well as
there will be a movie coming at some point. And again, the story's still going to play out. I mean, we're still talking about a stock that went from $15 to $483 back down to $100. And if you think about it in the context of the last month, you still have a stock that's at $100 that was at 15.
Mm-hmm. It's crazy. Still crazy to think about.
And I know retail's taken a beating on this from the last few days. Retail still made a lot of money on the way up.
Mm-hmm.
Hopefully they cashed in.
You got to close though, guys. You can't treat GameStop like Bitcoin, like GameStop's going to, revolutionize the stock trading world. No, GameStop's not Bitcoin. You can't do the holder.
Yeah.
No. All right, let's move into some other storylines. Obviously, we've got busy earnings weeks last week, this week as well, Matt. We had the two ones that we kind of highlighted with, but there's some other
I got four
really big names I wanted to get to. So let's round them up.
I got a couple more I want to quickly go through. First and foremost, CMG, please. Now, everything is relative to kind of where you are and what you've done, right? You're never judging anything based on, in terms of earnings or the market, based on, okay, everything starts at zero. In the market, guys, pro tip, nothing starts at zero. Everything starts at expectation, whatever those arbitrary expectations are based on future guidance, right, that the company provides us. And so in terms of CMG here today, first and foremost, before I get into the raw numbers, CMG had basically a very, very impressive, 21% growth in the quarter, 74% growth over the last year. And quite frankly, from the first of the year on, I mean, we're talking about a company that's up a good couple hundred points just in the latest run. So we're talking about a company that is at the highs of the chart, that's had great price appreciation. And realize what we said on, what's going on in Amazon specifically, what we saw in Microsoft, Apple, and those very robust earnings reports that, even though we didn't see the great price appreciation, at least it justified the appreciation that had happened in the past. CMG had a very good run coming into this earnings report, and so the expectations are going to be a little higher than when the stock is at the bottom of the chart and it's fighting for the lifeblood. I mean, when you're at the bottom of the chart and you're sitting on support, I mean, the market, just tell the market you're okay and the market will buy you up a lot of times. When you're at the top of the chart, you got to impress a little bit. You can't miss. That's the point. You can't miss. And CMG missed last night. And so CMG's raw numbers, they weren't terrible. I mean, they came in at 3.48 on EPS number. Revenue did come in at the 1.6 billion versus the 1.6 billion expectation. And so EPS number came in about 10% less than the expectation. And so a fairly sizable miss on EPS. And missing EPS, and you'll see this with the EA later on in earnings roundup as well. But when you miss on EPS, that is vastly different than missing on revenue. You can miss on revenue and people will forgive you. You miss on EPS, nobody's forgiving you in this environment when you miss on EPS unless you NLP and paint a future expectation of so robust that we can overcome the fact that you missed on EPS. Well, here's CMG. Missed on EPS number. And so very simple, a slight miss on EPS numbers. They came in at the expectation on revenue at 1.6 billion. And even though they did see robust growth in takeout, in delivery through name your delivery service out there this time.
DoorDash and all of them.
Yeah. Oh yeah, DoorDash, Uber Eats, all of them, right? But they did see robust growth there like we expected, but cost associated with that also rose, and that really impacted their EPS numbers. Very quick takeaway, again, when you are this high in the chart and you have this type of expectation, CMG, you need to sell more burritos. And they just didn't sell as many burritos as they needed to sell to him. This, to me, the quick takeaway, honestly, I expected the market to be down a little bit more on CMG, got gobbled up at that intraday support level. I'm a little hesitant here just because the numbers I don't believe support the price action. Tyler, what do you say from a technical perspective?
This is a tough candle. There's nothing you can do on a day like this. You just have to wait. The good thing is it hasn't done any damage to the uptrend. So if you were fearful of, oh my gosh, this earnings, they whiffed and it's going to kill the uptrend, not so much. This is noise. It's still above the 20 MA, still above the 50. So your long-term bullish thesis is intact with respect to the chart. But from a short-term trading perspective, this is about as hard a candle to try to place a trade off of as you can find. You have a massive wick at the top. You have a massive wick at the bottom. You're fiddling in the middle. You're not close to a trigger. You need to let this chill for a few days, I think, and then reassess. Yeah.
And I have some concerns fundamentally here at the top of the end too.
Mm-hmm. Are you at least impressed by their ability to go to online the way they have through this pandemic? I mean, I think part of the thing with that behind CMG, this whole thing has been they were able to start converting their sales in these different ways. And I have complete concern about the numbers. Don't get me wrong. And I have complete concern about the chart, but that was one shining light in there.
I am impressed. And so is the market. It went from 400 to 1600, but I'm sorry, it doesn't support it now with the earnings numbers.
Mm-hmm.
This to me, and again, it's CMG, but this to me is like, okay, you've had a great move here. You got to be happy that you didn't get pummeled on the miss on EPS.
Could have been worse.
It's not going to scare you that much, but it also wouldn't. I want to kill anybody for locking in some of these long-term games and looking at other areas of the market. Though I didn't like the miss. I'm sorry, I didn't.
That's fair. That's fair.
You can't miss after you go up like that.
That's fair. Yeah, I mean, that's right. In fact, it's surprising why it didn't sell a little bit more, Matt. They pulled their guidance. They missed their EPS number. You could easily have seen this sell off a little bit more. To Tyler's point, it didn't really destroy the chart.
You could have saw Amazon go up a little bit more, but that doesn't mean I want to chase CMG here on a bad earnings. It means I want to look at Amazon on good earnings.
That's a fair point.
Yep.
Okay. All right, next.
All right, next. Let's take a look at EA Sports here. And we got Activision coming down the road, but hopefully EA is not a signal of all things Activision. I'm talking the raw numbers. I'm not talking in terms of the price action. I'll get Tyler's take on that. Raw numbers, EPS numbers. They were expecting $2 and excuse me. Let me get I got yearly numbers. Give me a second. I'm going to move on to Match.com actually. Let's go to Match MTCH. All right, Match.com here. Number one, this kind of feels like technical short here, Ty.
Yep.
Is that kind of what you're feeling too? Match.com, and again, came in very lukewarm earnings report out of Match here. I want to get Mark's take on it. I know you kind of follow Match, Mark. I know you just joined us. Sorry to throw you right there to the wolves there, bro. But Match came in at 48 cents versus the expectation of 48 cents. Revenue came in at 651 million versus the expectation 653. Revenue did increase 19.1% year over year. Just again, came in at the expectation, missed on revenue projections. There's nothing here in Match's earnings report to be like, hey, let's buy. There's nothing impressive. It's just like, But technically here, you're looking at an M formation in the short term, followed by a followed by a violation of that support line, that trend line, followed by a bearish retracement, which I would call a kiss of death in the short term. Tyler, what's your technical read here? The earnings numbers were blah. They were okay, but it's not going to wake anybody up, and it's not going to get anybody excited.
This is a messy chart. When you look at the trend structure, it came into the earnings having made a lower pivot low, being below the 50. A little bit of optimism yesterday, apparently unwarranted, unfortunately. But you have a series, not a series, but you have a lower pivot high, a lower pivot low. You're now back below all moving averages. That's not a buy, right? That's not a buy. It's a short. So if I had to do something, I'd short it. The reason I wouldn't short it is because bears get punched in the face one day after they get in these days.
Every single time.
Every time. So
every single time.
Just because we say it's a short doesn't mean I'm super bearish. It just means if I had to do something, I'm with Matt. I'd rather sell it than buy it here.
Is that what means right now? Like a short just means don't buy it.
Is
that what a short means?
Listen, if you need me, if you hold Match.com and need me to unhide my profiles because they've been hidden for a while, I haven't been in the mood to date. I can do that to help prop up the show.
Dude,
so.
You gotta get Max Loss on Tinder, bro. Come on, you tell me Max Loss wouldn't be a winner on Tinder?
Listen, if you want a good time,
nope,
no, you keep doing it. Dude, are you kidding me? If Max Loss was on Tinder, man, you're buying that breakout of 150.
If Max Loss goes on Tinder, I'm shorting Match.com. So
I'm not. Are you kidding me?
I'm going.
Dude,
don't
you
know
can
what.
disagree with Davey Day trade, but people gravitate to it.
Hey, Match.com is one of those companies. You ever get a big dip? This is one of those companies I really believe in. I've been talking about Match.com for years. They own all the intellectual properties. The chart is never, it can be very, very messy. If you're interested in a play, wait for a support level to form over a couple weeks. Those have been the best plays on Match.com in the last couple years.
All right.
Agreed.
Awesome. All right. Earnings Whispers needs to get their act together, by the way. EA,
Hey,
let's
Tim.
go to.
I like climbing and camping and outdoors. You want to swipe right on me, buddy?
That's not Tinder, bro. Just said that. No.
Oh,
Bad Max loss. No. I'm not doing it. Next. All right, move on. EA.
oh, wow. I don't even know what to say to that.
Oh, we can go. Listen, we can turn into the skit. If you want to wallow in this for a long time, you know how I like that kind of stuff. But
I mean, were you guys doing anything serious before I showed up?
we
That's what I
were.
want to
Yes,
know.
you threw it off the rail.
We're-
You heard Match.com and you magically appeared. It was like
Listen, you got to trust your gut in life, right?
that's right. That's right. All right, Maddie. EA earnings.
I'm getting like 3 sets of numbers from EA, honestly. Here's what I know. Because I don't know what the exact, honestly, I don't know which ones are the accurate numbers. But they missed on EPS, they missed on revenue, and lowered guidance. All terrible. Whatever the raw numbers are, terrible.
I had 70.
Especially the guidance.
I had 72 cents, 2.4 billion. I don't know if that's what you had on one of those.
Yeah, I have that on CNBC. I have different numbers on a different website, and I have even different numbers on Earnings Whispers. So I think it's 72 cents, but it is a miss, and they missed against comparables. So miss on EPS, miss on revenue, lowered forward guidance. This is a terrible report for EA. Whatever those accurate numbers are, I do believe it's the 72 cents. But the terrible numbers coming out of EA here today. Tyler, EA, this area of the market has been good. What's your technical read here on EA?
Yeah, once again, it's tough to place a trade on the earnings day, right? So the recurring theme among these has been that typically you got to wait a few trading sessions unless you just get a unicorn or something type of setup. It came into the session bullish and, it got whacked. With how much volatility this is seeing, you still got a couple hours in the trading day. It probably depends on where it closes. I think you can't short it because the long-term trend still looks good. I don't want to short this thing, but I don't want to buy it either.
Honestly, I'm not a fan of EA. It's not the company I like. The lowering guidance is concerning for Activision for me, though.
Does it? I was wondering about that.
It does put greater emphasis on Activision, separating itself from EA to a certain extent.
Mm-hmm.
And so they are these gamers, they're going to run in the same direction like a river, but they're not correlated 100%. Right. And so they do separate themselves from each other. Activision needs to step up to the plate and do it and show EA how it's done this week. Without that, Activision could get a little bit of that same type of sell off. And quite frankly, that would be a little concerning. So I do have more concern about Activision today than I did yesterday because of the EA report, yes. But it wasn't the miss on the EPS. It was the lowering of the guidance. And it was an aggressive lowering of guidance, guys.
Mm-hmm. Mm-hmm. And Activision does report tomorrow after the bell.
Yeah.
Obviously, we'll be breaking that down
Well,
on
and
Friday.
EA is EA, but I mean, Activision's tackle 25 stock, and it's been a tackle 25 stock for years now. So,
sure.
An earnings report and a miss isn't going to knock Activision off the list. I do not remove companies from the list unless something dramatic changes from the underlying fundamentals, and lowering guidance isn't just that. So I wouldn't remove it, but it does give me a little bit of additional concern coming into this report.
Mm-hmm. That's fair. Any other earnings roundups, Maddie?
One, Spotify.
Ooh.
We got to do the one that never makes money.
All right. This
is your fanboy. So
I know. Did you hear his voice?
Yes,
he said
he got
one negative thing, and he's like,
All I said was they don't make money. It's
No, they don't.
an actual statement. I don't know why every time
No,
I
they don't make
factual
profits.
statements, you get upset.
They make sales.
They don't make
Oh my God! Did
profits.
you just say that? You need to go on Reddit.
Interested in companies that make profits.
I mean, no, they're not net.
You guys
green.
might not know this, but Tim bought GameStop at 483.
Did I buy the tick? Let me check my trade log. Hold on. All right. So how are you going to rip on Spotify? Let's hear it. Let's hear. Give them your best shot.
I think you ripped on him more than I
Oh
did
my
based
gosh.
on your emotion about him. Spotify came in at a loss of 79 cents versus the expectation of 74. Revenue did come in line 2.6 versus 2.6, and they did lower guidance. So Tim, do your best to color up this one, because we lowered guidance, we missed on EPS, and you came in line on revenue, and you lost more money than you thought you were going to lose, bro.
They continue to lose money. There's no question about it.
No, dude,
We all
you
know
gotta
where
do is start
Spotify
talking
is.
Joe Rogan. Come on.
We all know
start
where
talking.
Spotify is in the history of their life cycle, whether they become this huge, massive media giant or not. Well, guys, they've had a really, really successful product and brand for a while. The moat here, Mark, would only be around product, and would be around brand image and the way people love and use Spotify. It's not currently on the profitability. They are a loss-driven company right now. But Matt, their sales and their revenue have been growing year over year over year over year, every year about 25%. They still put up a pretty good revenue number this time. I understand. It's just this is you either believe in Spotify or you don't kind of
fine,
stock.
but I'm sorry, you're right on all of that. But guess what? Guess what else has risen with that?
Their cost.
Their cost.
Yes.
So they're hundreds of millions of dollars they're paying out to podcasters out there. Spotify, remember, Trading Justice. We've been around for a while. It's a great podcast. I'm just saying, Spotify. I will say all the amazing things. I will sell this company for you if you need me to. I have that ability. Just remember, Trading Justice podcast there, Spotify.
Mhm.
But until Spotify approaches me, Spotify. This earnings report is not justifiable based on what this stock has been doing. This is a company that loses money, and it has at best a questionable path to profitability. This is not a Netflix. And so I know there's people out there, well, yeah, they're in their acquisition phase that Netflix is in, and look what Netflix did. I'm sorry, we're talking podcasting versus content through Netflix. They're not the exact same. Are they going to be able to monetize those podcasts? And they better be right on those podcasts. I hope they are. I'm a fan of a lot of those podcasts. But from a stock perspective, they need to find a way to monetize that, because this company is not making money, and it should have been sold more aggressively than it did. It lowered guidance. It lowered the down 6% is fine. It's fighting for support at this point. That support level gets clipped. You're talking about a company that's at 240 in the short term, in my opinion.
You got to monetize your users, Spotify.
Dude, I pay him $10 a month, so
yeah.
I love Spotify.
I don't. Pandora, baby.
Pandora, Spotify debate. Not today. All right. We don't need to rehash that old one that you've lost 100 times. Listen, there's nothing good from the numbers here. This is absolutely one of those stocks you either believe in the storyline or you don't. They did pick up a lot more monthly active users this time around. Year over year, I think that was up 27%, but their costs are out of the roof right now, Matt, no question about it. The loss at 79 came in bigger than their expected loss there, like you talked about. So no, not good numbers. Easily could violate support here. I'd be very, very cautious. Tyler, anything on the chart?
No, I mean, it's a Matt's. You're looking for a breakdown under 305.
Yeah,
and if I wanted to get punched in the face, pivot. I would short it.
You would short it if it broke down?
If it wasn't 2021 and shorts get sent to the gulag, yes, we would look at short here. It's not the miss on EPS, though, is the concern. You're talking about a growth company that is fighting for the path to profitability, and they just lowered guidance. That's the concern.
Very good. All right, that's our earnings roundup here for a Wednesday, 2/3/2021. We also, one last thing I want to do here today. Tyler actually had a couple of trade ideas he was thinking about in the energy sector. I asked him to bring and be ready to talk about. Tyler, you're up, man. What do you got?
All right. So crude oil's been running, energy's been hot. I think today, earlier, the energy sector was the best ETF. You take a look, XOP up 4.5%. This is the oil and gas ETF. XLE up 3.5%. So I was looking at the energy sector, and I found, I'll go with Valero. I was looking at the bigger picture on Valero weekly chart. You've got a nice little high base going, and it has a clean resistance level over $62. It's got room to run up to about 77 or even 69. Regardless, it's got room to run if it takes out this resistance zone. Earnings is out of the way. It didn't do anything on earnings, which is good. And it's just up to testing that resistance zone. So I like Valero on a breakout over 61.50. If you want an option trade, I'll get into that here in a second, but that's the technical pattern. What do you say?
I'll start here. Obviously crude oil strength, there's only a couple ways you can play that directly with the commodity. And if people aren't playing crude oil these days through the ETF and whatnot, you end up into the ETF market, into things like the XOP or the XLE, those type, or into individual companies. And as you're looking through this sector here, we're post earnings on Valero. So just from a pure trading perspective, at least you have that in the rearview mirror. That's good. I like that part of it. I like the clear entry point up here at these resistance zones. I believe based on the run into this here, we could probably map out a trade. Where would you target? It would be my first question. Ty, you're thinking 66 where that little congestion is, 68 where that gap fill is, up into 70. Like where would you be thinking target?
Yeah, target one would be 68 for me.
Okay.
Yeah,
I can see it.
Congestion zone. Yeah.
I can see it. Stop loss placement would be the key here. So it would come down to whether I could get stop loss placement in a very good place.
It's a breakout. You can put it underneath the breakout channel when in doubt.
Mm-hmm. Maddie, what do you think?
If you're looking to play oil without playing oil, I think you'd probably go to the Chevron and Exxons over the Valeros and Phillips 66 and Tesoros of the world. And so, if you're going to play the oil market, I think it's better to play the drillers, right? The Exxons of the world than the refineries, which Valero is. And so I think it's like, for example, I'm sure you're going to have another energy play here, Ty, and I don't know what it is.
Mm-hmm.
But if you're going to try to tie to the strength of oil, I think Exxon's much better positioned than Valero is. And I like the technical pattern on Exxon from a bullish retracement. It fought for that 45 handle, would post earnings. It navigated the 45 handle on earnings. We got through it. And now you're talking about a stock the last 2 days that is fighting for confirmation, getting back above the 20-day moving average, which is slightly better than what the sector itself is doing, as the sector is still kind of hovering slightly south of the 20-day moving average. So if you're going to try to tie to oil, I think getting a driller like Exxon is probably the preferred methodology.
Fair enough. In my defense, Exxon was my pick last time we did this.
I remember.
Yeah, I figured Exxon might be already on your radar there. But yeah, relative to the actual technical pattern to Valero, I do like a position trade here. I don't think you're going to swing it up to 68 to 70. I think you're going to have some high bases, and I think you're going to have some dips there. And so I do agree with the technical target there in the 68 to 72 area. Absolutely T1, T2. But I also think it's going to take a little bit of time to get there. Valero's not, I think Valero more AT&T than ExxonMobil. Like it doesn't move like that. And so, yeah, a strong movement on a swing trade would get it into 68 to 70 area. I just don't expect that. I like it more on that weekly chart. I think that weekly chart is really clean, and you're coming off, a double bottom there, a very weird double bottom, obviously, but you are coming off a little bit of a double bottom, and after earnings from last quarter gap up, you consolidate. I think that's pretty clean on the weekly chart, and that would lead me to more position trader analysis, especially given the fact that I think it's a little choppy on the daily. So I do like the weekly breakout, and I do like a position trader.
Mm-hmm. Very good. Very good. Next, Tyler, I think you have two. Is that right?
I got a couple. Yeah. SunPower. SPWR. Solar
Earnings.
stocks. Yeah, I know.
What days
Sorry,
are
it's my instinct.
yeah,
I just
you love
whenever
it
I
way
s-
too much. You're like
it's
Look,
like
he gave me
Pavlov's
the
dog.
floor. He gave me the floor. I started for 5 seconds and
Ernest,
he jumps in.
he acted like this was a scouting report meeting. Like,
Just pipe down, all right?
by the way,
Somebody mute him.
what you just saw is Tim does this to us like at least 5 times every scouting report meeting.
Uh-huh.
Like it's just, like he doesn't want to actually veto because he just doesn't want to do it. And so like he's the first one to throw out earnings on any veto. Like, and it's just like, oh.
Listen, that is our rule for our reports.
When's the
Obviously,
date?
you could map
When's the
out a
date?
trade here. You know, it's
You don't
2
know.
weeks out. 2 weeks
But
out.
when is the date?
Let's see here.
The date is February 17th.
You have more than enough time. You made the assumption Tyler was only 10 days out.
Ah.
Time frame.
Back off. Let me finish.
See?
Okay, look.
Tim,
look.
if you let him finish, that was the first time I got to say that to Tim and actually be accurate.
Give me the analysis. All right. Now I'm coming at it with a critical mind here. I'm going to have to reopen that brain of mine. All right. What do you got? What do you got here, Ty?
All right, just forget earnings for a second and bask in the glory of this setup. Okay, hot sector, very pretty bull retracement pattern. Had we not yapped so long and talked about this 30, 40 minutes ago, the setup was even better. It's already started to bounce. It knew I was going to mention it, and we got people front running us right now. Sitting right at the 20, were I to pull up Mark's girlfriend, we may or may not be at that 9 EMA as well.
No, the 9 EMA is going to act as resistance for it. Deeper
That's why I'm not bringing it up.
Forget
I said anything. Said anything. Sitting right at the 20 EMA. Dips have been buys in solar forever. And here's the thing about earnings, okay? Earnings really haven't mattered in this for a while. To be fair, you could say, yeah, but the thing just went up, 100, 200%.
A billion percent,
so,
yeah.
Yeah. So maybe it'll matter this time. Okay, fine. But what I'll do if you want to do a little swing trade and get out before earnings, fine. I think you got the risk reward here. Trigger over today's high, stop the low, target up around 55. But I also like this for a cash flow play. I was looking out to March, which means, yes, I would hold this into earnings, but I'm going to rely on the fact that they're going to let me go pretty far out of the money to hedge my bet here. When I was looking earlier, I was looking at the 9 delta, the 27 strike for $1. If I get $1 for that, my margin requirement's about $270. 101 divided by 270 is a 37% return on a naked put, which by any standard is amazing. And if I look at 27 on the chart, I'm pretty far out of the money. They would have to destroy this after earnings, in which case I think you'd still have people come in and buy it because the whole narrative with Democrats and solar and all of that jazz. So There you go. You want to swing trade it and get out ahead of earnings, feel free. You could also look for about a 40% return on a far out of the money naked put with a 81% probability of profit. And I may or may not bring this up again tonight in Trade Masters. Mark, we'll pretend like you weren't here today.
Listen, I'm never going to say anything other than good things on a dirty, sexy money candidate for tackle trading. So it's a go for me there. But the only concern I have is, that high base that it was forming between 50 and 55. That failed. It was a pretty clean trigger on that 55 handle outside of the wick. I'm discounting the wick. Yep. But that failed. That does give me a little bit concerned. But Ty, am I reading too much into that?
Yes, you are. It had doubled. It had doubled, went sideways for 3 days, and couldn't hold the breakout. Don't buy a breakout after it pauses for 3 days after doubling. It was an overbought breakout going into it. The failed breakout is forgivable in my opinion.
Okay, and obviously SunPower is one of those stocks we do have some belief in. It's a high flyer. It can move, and it's not exactly fundamentally sound. I mean, even the forward P ratio is ridiculous, but we're talking about a swing trade. I'm in. I like it. You got to be looking at the solar play here in general. I think after the sell-off in recently. Mm-hmm. And so whether you're looking at the bullish retracement on SunPower or if you're looking at Canadian solar CSIQ, looking at that $60 type breakout scenario that you could get on SunPower, on CSIQ. I like both of those. So you got the retracement in, and this is a retracement too in CSIQ. I just think the trigger at 60 is a little cleaner. And you don't have as much chop on CSIQ because of the failed high base than as you do on SunPower. I like them both. It's just a matter of, I think you got to be looking at solar energy right now. You got the dip you've been looking for after a massive run to start the year. It's just a matter of which one do you want to play here. I like them both. I think the safer play is Canadian solar, in my opinion. The higher pop returned, not pop because that'd be probability. The higher potential home run is SunPower. So if you're looking for more of the safety play there, a little bit more of a standard reward to risk ratio and probability analysis and step system, that would be the Canadian solar play, in my opinion. But if you're looking for, hey, if Canadian solar works out, man, I got a much better potential return in SunPower here. So it's really just kind of up to the eye of the beholder to a certain extent. I like them both. I personally like Canadian solar a little bit more, but I like that SunPower one too. That's got a good return.
Mm-hmm. Yeah, that's all fair. The first thing my eyes saw were what you asked, Matt, about that high base failed on the candle on the breakout. Tyler, fair answer that you had there. Obviously, you got some volatility here. This is not a beginner's trade. Let's just say that, right?
No, it's a high flyer with volatility.
That's right. Yeah, okay. And a 57% short float and all kinds of things that's going around with SunPower.
We need to teach people beta.
Beta,
just a simple understanding of how fast a stock can move, and if you are comfortable with that type of speed. Because if you're not comfortable with that type of speed, I don't care what the technical pattern is, you shouldn't be looking at that stock. I do want to have Tyler take a quick peek very quickly at another solar play, a little bit of a different one, deeper. We got the potential short, consistent, retracement in Canadian solar. We got the deeper we got that slightly deeper retracement in SunPower. You got something pretty deep on run that is setting up a little bit here on the 50-day moving average. So you got a little bit of your flavor of the month here, a little 31 flavor Baskin Robbins in the solar market here. I do think these are the three potential plays that are coming up in the short term. A deeper retracement in run, a standard bullish retracement in CSIQ and SunPower. CSIQ a little bit less volatility. Which one just out of these three, Tyler, now that you're kind of seeing the backdrop, which one are you kind of leaning towards?
If I was selling naked puts, I'd still go with the SunPower just because how far out of the money I am and how good the ROI is. From the dude, I like them all three in terms of the setup. I don't know that I have a favorite of the three. I think they're all legit.
Yeah, I think they're all legit. It's just a matter of how you play it. I think the standard CSIQ one is the easiest one to play. The biggest pop potential is most likely SunPower and run. It's just a matter of kind of the eye of the beholder. Which one do you like technically better, I think?
I agree.
Because you do got that rounding 20 to be a little concerned out about the run, but you have that all the time in deep retracements.
Yeah, and you could potentially scale out into the first pop and go from there. So you would just manage it a little differently.
Yeah, a question I have for all you guys, though, based on what we're seeing in solar here, I mean, some of these charts are ugly. I mean, we're looking at three of the better charts in this space, but all of the market has been a little bit of a sell mode in recent history in after a tremendous start of the year in the solar industry. Do you guys have interest here, just in general?
Yeah, in general, I do. I'll start with that. Going through all these different charts, CSIQ obviously is on my watch list, like it's on so many people's watch list, who follow tackle trading. That one would be the one I would probably instinctively look towards first, because I'm planning on trading that a lot this year, right? And it's got a good clean pattern. The deepness of run, for some people might be attractive. It gives you a lot of good potential reward if you can get that trend back kicking. I have some concern here with the chart. I'd have to map through that a little bit more myself.
Well, anytime you see deeper daily retracements, you're going to have concern because it violated so many support levels, right?
Correct.
But again, you should always, on these deeper retracements that come into the 50-day moving average, you need to look at them on a weekly chart just to make sure that you're comfortable with that. And because your eyes are always going to move to those short-term daily support levels. And when you look at it on the weekly, you do get that different perspective a little bit on these deeper retracements.
Bounces off the 20 have been golden.
It's been solid. And so now that you see that and you're not seeing the volatility of the daily chart, you do have a different read on run here.
Man, it is like you say all the time, 31 flavors. We got at least 3 or 4 here flavors that you can kind of take your pick. Yeah.
Listen, I can go through other solar companies that are mid cap and above, but those are the 3 that you're picking from here today.
Yeah. Yeah.
Team TAC, what do you think? Team TAC, do you like the deeper weekly retracement on run? That'd be more, swing / position analysis, naked puts, obviously on deeper retracements. I'm sure with that volatility in run, you can map out some type of naked put if you wanted to do it in that capacity. Or do you take the more standard retracements we're seeing in CSIQ or the, Feld Alpha 9 bullish retracement we're seeing in SunPower?
Mm-hmm. It's a great question.
You had to pick. We all have. If you guys had to pick right now, which one? Should we play the game, Tim?
I'll play it.
Would you rather?
Uh-huh.
All right.
Locked in.
Locked in. Okay. Okay, Tim. Tyler, you know how to play locked in?
Do you know how to play locked in, Ty?
All right. Let's all play the game. Let's teach.
So am I choosing directional or cash flow or what I like?
Choosing what? Okay. It's what one you want to play, whether, Mark, you're doing a naked put on run or SunPower or whatever it is, because we know each and every one of you guys, right? You guys know us. So what do you guys think? So who's locked in first?
I'm locked in.
Okay, Tim's locked in. So Mark, which one is Tim going to pick? The deeper retracement on run, the Feld Alpha 9 snapback retracement on SunPower, or the standard bullish retracement on CSIQ?
CSIQ he's going to pick.
He's going to do a directional trade on CSIQ is what Mark says.
Tim don't like his deep pullbacks. He don't like those. And he won't he will go to bed tonight being earnings on SunPower's coming up. Earnings on SunPower's coming up. And so it's CSIQ for Tim. I know Tim.
Nothing arbitrarily to the right of that chart for Tim to get a little concerned about. All right, Ty. What do you think about Tim?
That rationale was compelling. I'm gonna double up on the CSIQ.
You guys know me. Let's cut to the chase here. You guys know me. I would lean CSIQ because I like the delta play here. I would be aiming towards that. And by the way, the straight equity play, I can get rid of the option volatility that you got to pay premium on some of these other ones. So I would go with CSIQ, and I do want to own the equity. So if I was going to choose it,
he's going to equity above 60, and he's targeting that 67 level with the secondary target of 70. I already know it.
Correct.
Yep. All right. Okay. Mark. Okay, Mark, locked in. Are you locked in?
I'm locked in.
Okay, let's go with Tim first on Mark. Can you psychoanalyze Mark the same way he did you?
Yeah, he's doing run. The weekly moving average coming into that, when you showed that chart and he's like, that's pretty.
He gave the tell. He gave the tell. He got snake eyes. He got the aces in the pocket. He got the smirk. He gave the tell. He looked at that weekly chart and he said, oh. And that's the tell. I'm going run 2, naked put on run, deep out of the money.
Correct. Mark, Tyler, you agree?
Although he's interested on the deep out of the money SunPower one too.
So Mark, where were you locked in?
No, mine is I'll pick up the $100 on the 27 on SunPower. I would out of directional plays, I would play run on a directional play.
So you like, give me $100.
You like that SunPower at 27. I can cash flow that for the rest of my life, and with the strategies I do. Give me $100 there, and I will go do other things.
He wants the cash flow. All right. Okay, Tyler next.
All right, Tyler.
I think Tyler's sticking with the SPWR out of stubbornness.
Tyler is so stubborn. He's not going to listen to us. He's going to stick with. Nope. Now that you said that, he's going to show us the true nature, and he's going to go with the. He's going to go with CS. No, he's going to stay with SunPower. He's done his homework. He looked at these stocks. He already analyzed them. He already picked his SunPower.
Yes, he's going to go SunPower.
Ding, ding, and
he's already in the trade. He gave his tell. He's like, yeah, I already. And then he's like, you could. Yeah, he already did it.
I'm like those GME. I'm like those GME guys.
Is what he's doing.
That's right. That's right.
Yeah,
I need you guys to pump this up for me. Look, it's so far out of the money. I'm with Mark. It's
pump it up there, buddy.
Matt,
my turn.
Yeah.
You Yeah, I'm locked in.
I'm locked in for Matt as well. I'll go first. I think Matt is going to go with CSIQ. He knows the fundamentals behind the company. I think that tail on that high base breakout actually does concern Matt somewhere, maybe as a tie breaking vote, something like that. I believe the deep retracement in run is attractive to Matt. He probably map something out. It might go there, but I'm going to go with CSIQ. I think it's got the clean technicals and he knows the fundamentals behind the company.
Unlike you other two, who are as easy to read as like a person who's never played poker before sitting down at a table for the first time, Matt likes the CSIQ, but I think he got really enticed by how many times it came down to the 20 weekly and just held. I think the risk reward is just so compelling here. I think he's run. I think he's going to go run, but I don't feel as confident as I did the last two of you.
I think he was saying you two shouldn't play poker.
Which is fine. Okay.
Fine with me. I will go with run as well. I think he wants a little higher octane play than CSIQ. Mm-hmm. I'm going to go with run.
You know, I honestly, you know, I like them all. I think you can map out trades on all of them, to be perfectly honest with you. And if one works, the other ones are going to be okay, I think, right? But I'm gonna do a little something different here. I'm gonna throw a little wrench in. I'm gonna split position.
My first guess was Matt's gonna do something that makes us all wrong.
I'm gonna split position.
I didn't know.
This is not the game.
I'm gonna split position.
Locked in is not.
Are you telling me you can't pair straight?
No,
what are you talking? You can't pair straight. I'm splitting position. I'm splitting position. I'm taking the run deep retracement on the weekly position, and I'm popping swing on CSIQ. You can do it. Why not? Why not have your cake and eat it too? You split position, you take the consistency of the safe play in CSIQ, and you split the position to take the home run hitter in SunPower run. And I just like that weekly chart on run because those algorithms are nailing that 20 weekly. I love consistency. So there's nothing wrong. Listen, if you go full position, you can't float me on this one. If you go full position, what's wrong with splitting the position on the same area of the market that's going to do something similar when you can take
nothing tactically wrong with it at all. Nothing tactically wrong with it. In fact, it's a very smart idea, but locked in, you lock in. You got to pick one. You got to pick one.
I am locked in.
Locked into a split position. I didn't have that as the analysis. By the way, guys, we play that game all the time at my family dinner table. I love locked in different ways. Tyler, it's a fun little game, conversation starter, fun way to even talk stocks here. So
if I had to choose, I would take the CSIQ trade. But that run, I do like the run deeper retracement, and I do like that battle of support. I just think on that deep retracement on runtime, if you can come back to it very quickly.
Yeah.
I just feel like you got cheap risk here, guys. That's what I feel.
The word risk is very attractive here. There's no question.
Yeah, I just feel like you got cheap risk because, I mean, you're not going to get there in a week, but I just think 100 is doable here. If this area of the market recovers, I think 100 is doable. You got what are you triggering above the high? I haven't mapped it out yet, but you're triggering somewhere around 76. You're putting a stop loss somewhere around 67, and you're targeting T1 at 100.
Yeah, you're risking 8 to make 25.
Yeah, I do that any day of the week.
You're going to talk yourself into run over CSIQ the longer we look at this chart.
No, I've already told you the proper way is to split the position. Take some safety, take some hitters.
Swin's calling you out too. He says that's not the rule of the game, Matt.
In baseball, Swin, I got to have a utility player, and then I got to have the home run hitter. Well, I'm going to take my leadoff hitter, Ricky Henderson, and he's going to get on base for me. And you know what? Mark McGwire, pumped up on B12, steroid shots, is going to smack a home run. What's wrong with baseball theory? Nothing wrong with that.
Ricky Henderson reference to end the show. How about that? Who had
Ricky
that?
Ricky does what Ricky does.
Ricky do what Ricky do. No doubt about it.
I got a Ricky Henderson joke.
Oh, do you?
Ricky Henderson's so fast. He had a line drive, hit himself in the head sliding into second.
And that is a true story. It's not a joke because that's how good Ricky Henderson was.
He was an amazing player to
Yeah,
watch.
the guy
Actually,
played professional baseball till he was in his 50s.
he could run. That boy could run, no doubt
I
about
love
it.
Ricky
That
Henderson.
man was just amazing at stealing bases.
In fact, Ricky Henderson's in the Hall of Fame of two things: one, baseball, and two, first person references. Him and Karl Malone. It's that list.
That's funny. All right, let's wrap this thing up. Mark, promote your event tonight.
I mean, that's
if you
why I
can.
showed up and here. I mean,
figured.
I showed up at 11:50 Mountain Standard Time, thinking, you guys are done. We're very chatty this week, aren't we? Well, you know who is going to be extra chatty tonight with great picks and good jokes. Tyler is coming back to challenge Greg Holmes. And these guys have had two battles on Trade Masters tonight at 7 p.m. Eastern here on the Tackle Trading YouTube. They bring some amazing picks. Some of these are cash flow. Some of these are directional. Some of them are spreads. Some of them are investments. They bring their picks. They bring their jokes. And they go head to head to see who can claim the belt. The one thing I make sure I have my notepad on Trade Masters because I've taken a lot of these trades and I've been very, very, very happy with the results. So unlike Spotify, we do care about profits on Trade Masters. So tonight, 7 p.m. Eastern here on the Tackle Trading YouTube channel. Come check it out. 45 minutes, jam-packed, lots of fun, lots of laughs.
Awesome. Tyler, thanks for being here, young man. Appreciate you as always. Looking forward to Trade Masters tonight. I don't know where I've got my money yet. I got to think through it. You better bring some different picks than what you just showed, though. I think you can't double dip on this one, Tyler.
Nope.
So you get your work cut out this afternoon. Marky, they've had a 1-1 matchup here. This is for the tiebreaker between Greg and Tyler. So have some fun on the show tonight. Matt, final thoughts from you, sir.
I'm still on the rules of this game we played, and I don't understand why Mark can do a naked put, but I can't split trade.
We are not turning this into
I
Axis and Allies.
We are
I think you should be
absolutely
able to do
turning
whatever.
this
Transportation.
into an Axis and Allies.
How many moves
Dude,
can the
only pick somebody
transportation
up once,
ship?
Bro. Tackle, we're out. Love you
Yeah.
guys. Absolutely fantastic day. Enjoy Trade Masters later on tonight, and we will see you same time, same channel tomorrow.
Go check out the Huddle podcast on the site, guys. Go read through the
Check
stories.
out
We're
the
going to be
Huddle. Share it. Let's get the likes out there for the Huddle. We're going to make this the Huddle podcast something good, guys.
Absolutely. All right, guys, we're out for today.